Welcome back. Now, Calgro M3 has posted its results for the year ended February, reporting an improvement in its gross profit margin to 29.43%, which exceeded the group's target range of 20 to 25%. But a decision to slow production during the first half due to political uncertainty weighed on the group's revenue and profit. Calgro M3 CEO Ben Pierre Malherbe joins us now for greater insight on that performance. Thank you so much for your time, Ben. Let's actually start off with that steep decline in revenue. I do, of course, note some of the reasons due to the uncertainty in the economic environment. Just talk to me about how worrisome it is, and if maybe, due to these decisions and the current macroeconomic environment, this is something that can be contained in this reporting period.
Yes, thank you. I think if we go back in the August results, our interim results, we reported that we have slowed down leading up into the national elections.
Yeah.
I think that's based on lessons learned and experiences in the past. Where in 2019, we were caught with a whole lot of units under construction in the township, which were invaded, and it was a whole process of evictions and fixing and all that. So this time around, we decided leading into the elections to slow down construction. We didn't want to get units to a stage where it's got roofed, but not windows and doors, but they're habitable. Yeah. So it was a conscious decision to slow down and not have these units available. We then decided to focus our attention rather on the installation of infrastructure that can't get damaged in the process and completing units that were close to completion in one of our JVs on the South Hills project. So yes, it was a conscious decision to slow down and based on lessons learned.
Have you now picked up on, that building and completing those units, and maybe picked up after a slowdown then in this reporting period?
Yes, we did.
Okay.
It took longer. We thought we just needed to go through the elections itself.
Yeah.
Obviously, the formation of the Government of National Unity affected our working relationship with public sector, where you deal with the metros and the provinces and all that. So that was prolonged delay. So it took us longer to go back into construction than we expected. And this is what you could see in the results.
Yeah, all right. Well, a bright spot there is the widening of your margins. Where did you turn up the volume, and how far can you take it for further margin expansion?
Yeah, I think because we work with public and private sector, it was a conscious decision to move away from the public sector exposure, because there's people waiting on lists for these houses to be allocated. So we decided to work for private sector. But what you saw in the margins here is where we capitalize on previous investments. If you look at a project like Fleur, for example, it's a project that was acquired in 2010. We've completed 10,000 units to date on that project. There's another 6,000 to be completed. So we were unlocking historic value. So if we bought land in 2010, which is 15 years ago, and we sell that land at current pricing, obviously that led to a margin above our target market or target range. Our target range is between 20 to 25% margin, but because of this old infrastructure that was invested over a period of time during the last 10 years and unlocking the historic land cost, that allowed us to keep that margin a little bit higher than our target market.
And Ben, what can you highlight about the pipeline of properties still to come online, and really the pace in which they can start contributing to group income?
Yeah, I think the important thing to look at the pipeline that we're currently talking about is we've decided to split between core business and non-core projects. So with the acquisition of the Bunkenveld project close to the Sandton CBD and the Waterfall Hub, that brings 20,000 new opportunities to the pipeline. So we took a step back and said, listen, let's look at our pipeline. And if we haven't got the intention to develop those properties in the next 2 to 3 years, we should classify them as non-core.
Okay.
It doesn't make them bad properties. It's just difficult for a project in the Eastern Cape to compete with a property in the vicinity of the Sandton CBD and there. So it was just a reset. And our pipeline is currently a combination of new projects like the
Yes.
Vredehoek project in Cape Town and the Bunkenveld project, and I'll come back to that now, in Johannesburg. But with these new projects, it's got different needs, different infrastructure requirements, capital requirements for investment. And if you combine that with older projects like Vredehoek, which I mentioned is 15 years old, South Hills has been going for 10 years now. If you combine the new and the older projects, you get a comfortable blend of contributing projects that's contributing by generating cash from operations and new projects that's got a need for the capital investment. So we've got a healthy pipeline with a good balance between old and new projects that complement each other.
All right. Well, let's go into the Memorial Parks segment. Paint a picture for us on the growth momentum of that business.
Yes, I think we had a great year with the Memorial Parks, where the contribution from the Memorial Park segment of our business grew from 4% contribution to an 8% contribution. We set a target some years ago already to say we would like to get to a stage where the Memorial Parks can pay for group overheads, and that's based on the fact that the development business is lumpy. If you do a development with sectional title, you've got to wait for all these units to be completed and ready for registration and transfer before we can bring it to revenue. So the Memorial Parks business collected 95 million in cash in the reporting period, and that was equal to our overheads. So we're delighted to see the growth in that, and would like to see that market segment growing by bringing more contributing parks online.
All right. Well, I mean, how would you then describe, because obviously now you are in a new financial year, how would you describe the company's outlook in the short to medium term based on the trends currently taking shape in the economy and the property sector?
Yes, I think it will be exactly what I said earlier. It will be a combination of new projects, which Bunkenveld, the new project that will bring 20,000 opportunities, and we say 20,000, that's a minimum.
Okay.
We've got a right to do quite a bit more, but it will be a balance between investing into infrastructure in the next 18 to 2 years on that project before we'll actually get to a stage of constructing units, residential housing. So it will be a balance of keep on going with the existing projects that's contributing to it and blending that with new projects that will be the future. If we can invest the infrastructure, and if you look at the typical infrastructure required for Bunkenveld, we need to upgrade the intersection on Old Pretoria Road near the Woodmead intersection on the M1, as well as the intersection on Marlborough Drive that links to the N3. We need to do some big strategic links between those two intersections, do the intersections. So that will take time just to get the infrastructure in place, and that will unlock our ability to deliver on these residential opportunities.
Amazing. Well, thank you so much for your time. We really appreciate it, Ben. That was Ben Pierre Malherbe, CEO of Calgro M3.